Welcome back to the Inner Circle Show. In today's episode, a self-cleaning Tesla Robotaxi, a competitor to the Tesla Robotaxi. Is Palantir too expensive? What on earth is going on with Nike? And much more. But before we get into all of that, don't forget to give this video a like, subscribe to the channel and turn your notifications on so you do not miss an upload Monday through Friday. It seems as though people have resurfaced or people have found a patent from Tesla from 2023. This patent is obviously very, very long, so you can go and read it all and have a browse through it in your own time, but let me just run through the most important elements from this. So key features include the environmental detection through various sensors, detecting temperature, humidity, and presence of pathogens, etc. It mentions customized sanitation routines, generating appropriate sanitation routines based on detected environmental conditions. It also talks about various sanitation methods, for example, utilizing HVAC systems, UV lighting, and steam generators. Automated processes, so automatically executing sanitation processes when people are not absent. And having an adaptive system, so adjusting sanitation methods whilst considering external weather, the vehicle usage, history, etc. So this tells me that Tesla have already considered how they will go about the cleaning of their Robotaxi fleet. This is really interesting. This is really good news because obviously if you are having an autonomous driving fleet of vehicles, it would be very, very beneficial if you had a method, if you had a way of actually having those vehicles self-clean. So not only are they having a fleet of vehicles that are self-driving, but also self-cleaning. That means a few things. Firstly, Tesla then don't have to do the cleaning themselves. They don't have to have that extra maintenance cost. And I don't mean cost just with money, I mean cost in time and resources too. They're not having to herd, sounds like animals, they're not having to herd their fleet for cleaning like I suppose normal taxis would. The driver would have to maybe clean the vehicle or however it works. But actually these vehicles can be cleaned by themselves, which sounds really weird. And then they can probably have more actual time doing what they need to do to make money, carrying passengers around. And it talks about adaptive systems and customized sanitation routines, which is definitely interesting because I could imagine in some of the more busy areas, so I'm thinking some places in maybe California, maybe New York, maybe London, I don't know, wherever else, where there's a lot of people utilizing a Robotaxi fleet, these vehicles will need cleaning, they will need sanitation on a much more regular basis. Whereas if you're thinking about a Robotaxi fleet somewhere more rural, maybe they would need less cleaning. And then if you're thinking about in the summer, in the heat, lots of people sweating, that would need more cleaning. Or even maybe in the harsh winter when people are bringing snow into the vehicles and things like that. So this is great because Tesla are obviously a very high-tech, innovative company. They think outside the box. Elon is always thinking 5 steps ahead of everyone else. So to know that they were thinking about this and got a patent on this back in 2023, I think is ahead of the time. And I do think they won't just stop here. Along with the autonomous driving fleet, I think they will release, they will announce, they will have a lot of integrated other high-tech aspects of a Robotaxi fleet. So they won't just be autonomous driving. They'll already be self-cleaning. There'll be other elements going on as well. And I've seen some comments on my videos when I've spoken about a Robotaxi fleet in the past. I've seen some comments on X and within my Discord community, like people having a concern that, you know, one reason they wouldn't want to add their Tesla to a Robotaxi fleet, you know, remember we can have Tesla-owned Robotaxis and fleet owners where a customer can add or subtract their car to the fleet whenever they want to make money. A concern that people seem to have about doing that with their own vehicle is, well, what if it gets vandalized? What if it gets really dirty? What if it's really disgusting to have to clean out? But actually, this self-cleaning method, this self-cleaning technology that Tesla are considering, I think, for their Robotaxi fleet, not that that's been confirmed, may actually help people become less concerned about the hygiene aspect of adding their vehicle to the fleet. Also, what I found interesting in this documentation, and I'm not saying that we should look too much into this or we shouldn't, because, you know, it's just an image within a document. Like at this stage, I don't think it means all that much. But I did see figures showing both a 2-seater vehicle, which I assume would be what the Robotaxis will look like, but also I saw a configuration of a vehicle that's much larger, showing 4 seats in that car. So I am wondering if Tesla will actually come out maybe on the 8th of the 8th and show two different sized vehicles that can be utilized in the Robotaxi fleet. I don't know. I'll leave that open to interpretation. I thought it was interesting. In other Tesla news, apparently we have a competitor that we should be keeping our eye on for the Robotaxi, a Robotaxi competitor. But let's talk about this and see what we actually think. A Croatian automotive manufacturer, Rimac, has announced that they are going to be producing a Robotaxi under the project name Vern. You may never have heard of this company, Rimac, before. I hadn't until I heard that they were, a competitor to Tesla's Robotaxi fleet. But maybe you have if you're really into your cars. They are probably most known for their electric hypercars. And they actually, interestingly, set a world record for driving an EV backwards at the quickest speed of 171 miles per hour. So let's talk about what we actually know. From what I can see, the concept that they are coming out with looks pretty similar to what we already know about Tesla's possible two-seater Robotaxi, which obviously we saw prototype images from Walter Isaacson's book. There are some similarities between Tesla's Robotaxis from what we already know and Rimac's version that they've announced as well. So some similarities include the fact that we could have both of them being two-seater vehicles. Now, I think that Tesla will absolutely have a two-seater Robotaxi vehicle, and I think we'll see that announced on the 8th of the 8th. But obviously, we were just speaking about the self-cleaning system, and one of the images in that showed maybe a larger car and a two-seater. So we don't know exactly what's going to be announced, but I think a two-seater makes most sense because that's the majority of how people travel, themselves and maybe one other, rather than filling up an entire vehicle. So I think we'll see that. But also another similarity is a focus around a center screen. Both I think will have a very minimal appearance and unconventional door openings with the intention to minimize space use, kind of similar to what Tesla's Model X is now. And I also imagine the Robotaxi app-based hailing system will be featured in both, because obviously you need some sort of app if you are going to actually run a functioning Robotaxi fleet. Project Vern, or Rimac's Robotaxi offering, is expected to begin operations in 2026. Which seems like a long way away, but we are going to soon be approaching the end of 2024, so 2026 really isn't all that far away, especially for a company who many haven't heard about before, and we'll talk about actually all this, I'll save this for later on, but for a company such as Rimac, and we'll talk about why this is important, why I don't think this is going to happen, basically, for them to be able to produce a Robotaxi offering and a successful Robotaxi fleet very, very soon. I don't think it's possible. And it's going to be a two-seater vehicle like we already mentioned, and they're going to be utilizing Mobileye's LiDAR technology. I know the way that us Brits say mobile is quite different to how you guys in the States say it. The vehicle will have level 4 autonomy apparently, and it's really important to recognize that Rimac won't be developing the technology themselves. Instead, they're going to be going about this by a collaboration, like I said, with Mobileye, and actually utilizing their LiDAR technology for the self-driving part of this. So Rimac themselves will only be doing the hardware for this, as far as I'm aware. It also looks like they are going to be having a keypad-based entry system. We're going to have to wait till the 8th of the 8th maybe to find out how Tesla are actually going to go about people getting in and out of the vehicles. But I think this will be different. I think that the Tesla Robotaxi will simply be a ride-hailing app on your phone, and maybe, with a quick PIN code or a click of a button, you can get access to the vehicle. They've already signed several agreements to actually launch this across 11 cities in the UK, the EU, and in the Middle East, and are currently undergoing negotiations with more than 30 cities worldwide. So it does seem like they are very, very serious about this, but let me just tell you my concerns. So let's think about what Tesla are doing or trying to achieve with their Robotaxi fleet. And I'm not speaking about safety or convenience or anything like that. I'm speaking about how Tesla will be going after the mass market. They are going to make sure that they have a very, very cheap offering. Tesla are going to make sure that their Robotaxi fleet, once up and running, is cheaper than people getting other public transport, so buses, taxis, is going to be cheaper than the likes of Lyft or Waymo or Cruise or Uber, all these other options, whether they're autonomous driving vehicles or not. it's going to be the cheapest option. I don't know if Rimac are trying to go for the mass market, but I really don't think they're going to be able to achieve this. I don't think they're going to be able to make the cost of the traveling cheap enough, and I don't think they're going to be able to produce the vehicles at scale cheap enough. But that doesn't mean that there's not space in the market for a higher offering, a higher priced offering when it comes to autonomous robotaxis. But this does mean that if they carve out a place in the market for a higher priced offering, they have to be able to compete with Tesla in terms of maybe luxury. So it has to be more of a luxurious drive for the passengers. And whether or not they'll be able to do that, I don't know. I think Tesla's Cybercab and Tesla's Robotaxi will be pretty luxurious anyway. It's going to be very high tech, I think. It's not going to be like the best thing that you've ever traveled in, but if you just compare it to an average taxi, I do think it would be better in a lot of ways. But in terms of who is actually going to be able to get the majority of the market share, it's going to be whoever can offer this for the cheapest, for the customer. But the biggest difference really is the approach. Rimac is equipped with mobile eye technology, which combines cameras, radar, and LiDAR sensors. Whereas we know that Tesla is going about this using artificial intelligence plus cameras. Then you have to think which one of those approaches is better for mass production and scaling. But this all leads on to a much bigger question and a much bigger problem here. Rimac, so far to date, have not delivered many vehicles whatsoever. I'm talking about less than 200. So they definitely have not mass produced a car before. And it really does take immense scaling and immense manufacturing at a mass level to actually be able to have an up and running successful robotaxi fleet. And I'd say this is one of the main competitive advantages that Tesla have. How do you mass manufacture a taxi vehicle, an autonomous taxi vehicle that will compete in market share with Tesla when you have never done that before? When you don't have the infrastructure in place, when you don't have the experience, when you don't have economies of scale. I just think this is like asking a snail to race a cheetah. It's not going to happen. And also, like I said, Rimac are only just getting into the autonomous driving space, whereas Tesla's been around this space for quite a long time. They've collected lots of data. They really understand what it takes from a hardware and a software perspective. They understand the approaches and the way that you actually scale this up. Then you add in their manufacturing experience on top of this, economies of scale, cost of goods sold, all of these things that are going to help them actually achieve this. I just think it doesn't make sense that there would be a competitor to this at this stage, and especially not a company that has never mass manufactured a vehicle before. You know, I do think the prototype looks good, and I do think there's room in the market for more than one robotaxi provider. But come on, this doesn't seem realistic at all. I'm going to keep a close eye because, you know, like I said, the prototype looks good, but making a prototype and making an autonomous vehicle at a mass scale, very, very different things. But do let me know your thoughts on this in the comments below. Palantir stock so far this year has done very, very well, but is it currently too expensive? I want to read through a Motley Fool article that came out just a few days ago in today's Palantir segment, and I want to talk about, you know, what I think about this. I've not read it yet, so this is going to be reacting to this in real time. So let's have a look what this says. So the title of this article is Palantir stock is up 40% so far this year. Where will this AI winner land at the end of 2024? Artificial intelligence has dominated the market to start 2024. Nvidia recently became the most valuable company in the world. I wonder if it still is actually. It keeps flip-flopping between first, second and third and is up more than 150% year to date. Investors are betting that AI is going to be a huge market opportunity as the large tech players spend tens of billions on it. Yes, we already know that more and more enterprises, more and more government organizations are spending more money on artificial intelligence. They are increasing their budget on artificial intelligence. This will increase. Everyone wants a bit of artificial intelligence at the moment, but there are going to be certain companies that benefit more than others from this. And there's going to be a switch in the market. At the moment, money is being thrown at any company that has an AI solution of any sort that mentions AI in any of their earnings. This is coming to an end. Money will now move from all these companies into those companies that can actually give tangible evidence, that can actually give tangible use cases, companies like Palantir. And Bank of America have recently said as well that they are reiterating their buy rating and their $28 price target. And one of the reasons for that is because Palantir will benefit from this continued AI momentum that we're seeing. Palantir Technologies is one of these AI companies. Shares are up 40% year to date, with accelerating revenue growth as customers adopt its intelligent software and analytics tools. Where will this AI winner land by the end of 2024? Let's find out. At its core, Palantir builds custom advanced analytics software. Customers range from the US military and its allies. US government revenue was more than $250 million last quarter alone, to the private sector. And when they say the private sector, I think they're underselling it a little bit there, because it's not just one area of the private sector. We are quickly seeing how agnostic Palantir's solutions are. We hear about them in healthcare, in finance, in the sport industry, in supply chains, literally in space, So everywhere that you can think of is able to work with Palantir. Corporations, especially larger ones, utilize Palantir's tools to analyze operations and track how its business is performing. Recently, Palantir has pushed its AIP, so its artificial intelligence platform, for its customer base. Yeah, and what we're actually seeing now is existing partnerships that were previously founded on maybe using Foundry are expanding their partnerships to add in the artificial intelligence side, so to add in AIP into their contracts. I'm not going to pretend to be an expert on how these tools actually work, but automated intelligence that provides useful insights can be important for complex organizations. Yes, the way of actually, well, you've got two things happening here. You've got understanding your data. So like bringing in all the data from all the inputs and all the outputs, which is very, very vast, especially at big organizations, giving that into one centralized place, and then actually being able to understand that data and action things based on that data in real time. That's really powerful. And then on top of that, they're actually utilizing the ontology plus LLMs plus artificial intelligence to give even more power to these organizations. And it looks like these tools work. Over the last 12 months, Palantir generated $2.33 billion in revenue. It has 554 total customers, 427 of which are commercial organizations, so not the government side. This is up from just 49 commercial customers at the end of 2020. Look at the growth in their customer count there. And yes, when this writer says it looks like these tools work, you've only got to look at the AIP Condays to see that. They literally, customers are coming free of charge to tell you how powerful Palantir's solutions are. Over the last few quarters, Palantir's revenue growth has started to accelerate again. I've spoken about this before and whether or not we should be concerned about the revenue growth that we're seeing. In terms of this being quite an early company, in terms of it being a growth company. Is their revenue growth actually too slow? I don't think so. I think it's a lagging indicator and we're going to see a lot of growth to come. But let's carry on. This is likely why the stock is up so much this year. Investors love an accelerating top line. Yes, they do. Last quarter, revenue grew 21% year over year to $634 million, driven by 27% growth in the commercial segment. Back in 2023, revenue growth had sunk to around 12% year over year. If we were still seeing that now, 12%, and it carried on like that over a few quarters, I would start to get a little bit concerned, but I don't think that's going to be the case at all. Profitability is shining right now, which is a great sign for the stock. Net income over the last 12 months was $300 million, which is a huge improvement from $500 million to $1 billion annual losses a few years ago. Yeah, they've come a long, long way. And since they've hit GAAP profitability, they've, it's remained. So that's really, really good thing to see. Palantir is proving that it could grow efficiently, meaning while generating a profit, a sign of a healthy software business. So now is the question, where will it sit at the end of 24? Because it's an exciting company, revenue should continue to grow as more and more organizations embrace AI and software analytics. The stock still looks expensive though, and I wouldn't buy it in the summer of 24. Let me show you why. Let's see if we agree about this. So today it has the market cap of around $54 billion. So it's actually still quite a small company, really, if you're comparing this to some of the other companies that are spoken about as often as Palantir. Still quite small, but it's getting a lot of attraction. That gives the stock a trailing price to sales ratio, so a PS ratio of 24. Remember, this is a sales ratio not based on profits. With an operating margin of 8%, Palantir does not generate much in earnings for every dollar in sales. Margins are likely to expand over time, but that is not certain. Obviously, nothing is certain. Software margins, SaaS margins are always better. I think it will expand over time, but yeah, I know, it's not certain. But even with expanding margins, the stock still looks expensive. Assuming Palantir can grow its revenue by 30% a year for 5 years, so that's an acceleration from current levels. What are we on now? I think it just said like 21%, was it? Yeah, 21%. So it is a slight acceleration to 30%. It will generate 8.65 billion in earnings 5 years from now. At 30% profit margin, that equates to 2.6 billion in earnings, or a 5-year forward price to earnings ratio of a P ratio of 21. That was a mouthful. This is not much lower than the S&P 500's index long-term PE level. What this should tell investors is that Palantir stock is already pricing in 5 years of 30% revenue growth and a profit margin expansion to 30%. These are some high expectations that should keep investors from buying Palantir at the midpoint of 2024. So that article is basically saying Palantir is great, it's doing really well, but don't buy at the moment because it's too expensive. Let me know your take on that. Personally, my take on this is the company is growing, it's doing everything that it should be. It's again providing some of the most real-world AI, real-world use cases that we see. Businesses, organizations are going to be lapping up Palantir solutions, as we're already seeing. That's only going to expand, only going to continue. The right people are driving this business. They have a lot of talent at this company. Everything looks to be going the way it should. It's going to become intrinsically more valuable. That is what I'm seeing. I am not going to stop buying at the current prices in case it's a little bit too expensive in the midpoint of 2024 or not. Granted, I'm not buying as much as I was maybe when it dipped slightly, or as much as I'm buying Tesla right now. But that just changes on a monthly basis. I'm just looking at what's going on out there, but I am still dollar cost averaging in. Let me know what you think about that in the comments below. In other market news, we need to talk about Nike. What is going on with Nike? Nike's stock is down by 29.26% at time of recording this video year to date, and it dropped about 20% alone on Friday, which was the worst day in its 44-year history as a publicly traded company. That is quite substantial. So the question is, what is going on? Why is this happening? Because as investors, if we can understand what is causing a stock to drop, we can then marry this up to our thesis and our conviction and actually see whether that drop is warranted or it's short term, it's volatility, it's maybe not warranted, and we can utilize that as a buying opportunity. For full transparency, I don't own Nike in my portfolio as an individual holding. I don't plan to, but I do find this interesting. So as we move through this, I would love for you guys that actually follow Nike more closely, or you have it in your portfolio, to let me know what you think about all this in the comments below. So it actually seems like there are a few factors that are coming into play to cause Nike not to do so well in terms of the stock at the moment. But it seems like the most important one, the reason that the stock is dropping, is because the company reported weaker than expected revenue, and more importantly than that, provided a not so positive, not so optimistic, a little bit gloomy outlook for the future. And it seems right now that the market is just not okay with anything but exceptional guidance. Nike are also concerned about some of their key markets, such as China. They were actually expecting sales to decline by about 10% due to a slowdown in their Chinese market sales. And this has all led to concerns among investors, retail investors, Wall Street analysts, institutional investors, about how do Nike now have the ability to actually grow and maintain their current market share, especially in the face of increasing competition that we're seeing from brands such as Lululemon, Hoka, some of the cheaper brands as well. Does this mean that Nike actually need to spend more time and attention to innovate more so they can stay ahead? In an effort to manage cost, Nike actually announced layoffs of about 1,600 employees, which is about 2% of their workforce. And this move is part of a larger strategy to cut back $2 billion in costs over the next 3 years. Is this going to be enough? So the question is, and let me know your thoughts of course, is Nike just an undervalued, strong business that will come fighting back and it's just having a hard time right now, and this is actually a buy-in opportunity? Or is this a die-in business? I do also think that we have the Olympics in Paris coming up shortly, and if they're smart about their branding and their marketing during the Olympics, and maybe they innovate a little bit more and release a new product line at this, good timing of the Olympics, it could help them. It could help them maybe see a boost in sales. But I don't know. Like I said, I'm not an investor, so I don't follow this one too closely. But let me know what you think in the comments below. On the screen now are the topics we will talk about exclusively on the Vault this week. And if you're a Vault member, I'm going to continue this episode and talk a little bit more today about Tesla's AI, hardware and software. If you're not a Vault member, thank you so much for watching this episode, and I'll see you in tomorrow's. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.